Ladies and gentlemen, good afternoon and welcome to the Inditrade Capital Limited Q4 FY21-22 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this call is being recorded. I now hand the conference over to Mr. Sudeep Bandyopadhyay, Group Chairman, Inditrade. Thank you, and over to you, sir.
Good afternoon, everybody. Thank you for joining this call today on a busy weekday. Very briefly, I will talk about the performance of the company during the last fiscal, which we just ended. I'll put out some facts and figures which also have been put up in the BSE site, and then I'll be happy to take questions. The key business update which we have put up, if you look at the disbursement last year, we disbursed about 17 crore in Q1, which moved up to 137 crore in Q2. It moved to 193 crore, almost 194 in Q3, and 162 crore in Q4. This pretty much mirrors the COVID phases of the country. First quarter, there was hardly any business. Second quarter, we gradually picked up. Third quarter was excellent. Fourth quarter, again, the Omicron scare made us tone down the business. Similarly, we had raised about 6 crore in the first quarter, which is hardly anything, 111 crore in Q2, 112 crore in Q3, and 136 crore in Q4. The AUM, which was 333 crore end of June 21, went up to 538 crore end of March 22. Collection efficiency progressively increased from 74% to 100% during the last quarter of the last fiscal. The rate of lending, by and large, blended rate has been around 22%, and we started the year with 22.11, ended the year with 22.28%. Our cost of funds have come down marginally from 12% to 11.35%. Interesting is regular portfolio outstanding, which on June was only 56%, has moved to 94% of the total portfolio. So out of that 538 crore portfolio which we had on 31st March, 94% was paying us on time. In other words, we had a PAR 0, greater than 0, which is portfolio at risk greater than 0, 6%. In other words, even if there is a 1 day's delay in repayment, we consider the entire outstanding from that client as PAR. So PAR was 6% on 31st March, and absolutely bang on time collection was 94% of the portfolio. Our net worth moved from 200 crore at end of June 21 to 14.4 crore 31st March 22. Branches, we have maintained the branches 173, we toned down a bit and it's 165. The number of employees came down from 1098 to 1037. This is the key business update. As far as disbursements are concerned, again, we have given a breakup between microfinance and non-microfinance, MSME in particular. And as you will see, this mirrors the COVID progress in India. April was 3 crore and 0.66 lakhs. May, nothing, because we are at the height of phase 2 of COVID. June, 1.88 and 0.12. This way we moved to November was 64 crore in microfinance and 10 crore in MSME. December again started coming down because Omicron came. February onwards we started ramping up. February microfinance disbursal was 26 crore, MSME was 13, March, microfinance was 37, MSME was 14 crore. On a consolidated basis for the year, if you see the profitability, our interest income came down on a consolidated basis, March 21 versus March 22, 149 versus 73. We had earlier calls mentioned that we have moved out of micro lending, and that resulted in drop in overall interest income. Whereas sale of services went up because this is our Inditrade rural marketing boombox, went up from 12 crore to 57. Commission fee went up from 6.4 to 14.1. This is predominantly Scalerator and boombox. Other income similarly went up from 14 to 56. So total income, gross total income went up from 183 crore to 201. Finance cost went up marginally. Net total income 154 crore last year vis-a-vis 168 crore this year. Net of employee benefit, depreciation and other expenses, impairment of financial assets, we ended up the year with about 7 crore PBT vis-a-vis 12 crore last year. Now I'll pause a bit here and just take you through our profitability on a consolidated basis year on year adjusted for non-cash items. If you see, last year reported profit was 12.39 vis-a-vis this year 6.86. On top of that, if you add back the ESOP, which is a notional charge, additional provision rather of 3 crore this year we made vis-a-vis 8 crore last year. Loss on sale of investment of 1.16 crore vis-a-vis nil last year. Depreciation, non-cash item again 4.72 crore. Our adjusted cash profit before tax vis-a-vis last year's 25 crore is 16.5 crore this year. We are just providing this sheet so that investors are clear as to what is our cash profitability in spite of taking impairment charges, maximum provisions and coming out of the micro lending business. The balance sheet, I'll not read item wise, but on a consolidated level, the balance sheet size went up to 656 crore. Our consolidated net worth went up to 214.4 crore. Portfolio performance, microfinance, where we started the quarter with 273 crore and we ended portfolio as on 31st March after all adjustments 310 crore. MSME, we started with 95, we ended with 121 crores. Microloan, as I said, we have exited pretty much the entire book, only a small portfolio of 1.63 crore, which is pretty much current, is left. Agri, commodity and others, we started 77.65, ended the year with 106 crores. Total, our portfolio was 448 at the beginning of the quarter, which we ended at 538 crores. I will come straight to the cost of borrowing. Segment-wise, microfinance, it was 11.13, MSME was 12.04, agri commodity was 7.65. As far as provisions from portfolio is concerned, MSME, we had a gross NPA of 10.09 and net NPA of 6.32%. Microfinance gross NPA of 1.6, net 0. Agri gross net both 0. Portfolio and debt details we give just to make you aware of the leverage we are carrying in the books. The debt equity ratio on March 22 is 1.74, 1 is to 1.74. In other words, our leverage is less than 2 times. And our solvency ratio is, including DAPTC partnership, is 86.83 and excluding DAPTC is 83.06% as end of March. As far as the portfolio are concerned, our microfinance portfolio share is 57%, non-microfinance is about 43%. Very briefly, this is what I wanted to leave with all of you. I now leave the floor for questions. Maybe I will request the moderator to take it over from here and facilitate the Q&A.
Thank you, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Rajesh Kumar, an investor. Please go ahead, sir.
Hello, sir. Thanks for the opportunity. First of all, congratulations to getting back to profitable on the quarterly basis. And the second thing I would like to appreciate is that as per the shareholding, I think now all the shares are unpledged. And that is also a good achievement for the quarter.
Yeah, thank you.
Sir, my question is for the regarding Scalerator. First question, how many states we are at present, and what is the future plan for the Scalerator?
Thank you for the question, Rajesh. I think Scalerator is doing very well. We are absolutely bullish on the business. In fact, we are expanding the team and the locations. As I think I had mentioned earlier, Scalerator has been profitable on a month-on-month basis and a cumulative basis as well last year. Expectations are that this year also they should do very well. Just for recollection, Scalerator operates in the 4 southern states of Tamil Nadu, Karnataka, Telangana and Andhra. We are going deeper into the states. In Tamil Nadu, we had Chennai and Coimbatore as our physical branch location. Now we are expanding to a couple of other locations in Tamil Nadu. Similarly, in Andhra, Telangana, we had 1 offices. Now we are expanding. Karnataka, apart from Bangalore, now we are expanding to other locations as well. New teams are being hired. We'll probably end up doubling the manpower during the current fiscal for this business. And we are very hopeful that entire growth will be very profitable as well.
Okay, that's great to know that. So, can we get to know the quarterly number exclusive for Scalerator, that is turnover and PBT? Because it is.
I will ask my colleague Naveen to answer that.
Yeah. So total PBT for the year was 76 lakhs.
Okay.
For Scalerator.
Yeah, this for the quarter 4 turnover and PBT we have separate. Because
that will give the total turnover and PBT.
Yeah, because that will give the growth trajectory.
Yeah. So total revenue was 9.33 crore. And total expenses were 8.57 crore. The total PBT for the year was 76 lakhs.
Got that.
Yeah.
Q4 can we get?
Sorry?
Exclusive Scalerator, can we get the same figure, turnover and PBT?
We couldn't hear you. Can you be a little clearer?
For the quarter 4, sir. Quarter 4, turnover and profit before.
Total revenue was 2.68 crore and total expenses were 2.56 crore. We made a profit of 12 lakhs.
Okay. Thanks. Okay. So any improvement in the loan mix for the Scalerator for the quarter gone by? Because last quarter I think 90% was business loans and we were planning to increase the product mix.
As far as we are concerned, business loan is the main product. We will continue to remain focused on the business loan segment. However, the other segments like a gold loan, personal loan, credit card, insurance, those are also growing. But in spite of that, I must say that business loan will continue to remain the dominant product in the mix. I just wanted to add a bit to what Naveen said as for Q4. I must tell you that Q4 was a subdued quarter for them because there were a lot of restructuring we did and for streamlining operations for better. So Q4 may not be the indicator of the trend. We hope this will be much better in the coming quarters.
Yeah, exactly. Because
that's
yeah. Because in Q3 we have around 24% PBT margin.
That's right. That's why I just clarified that. Q4 may not be the indicative.
Okay, sir. Thank you for the clarification. And sir, the next question is with respect to Moonbox. The business viability of the Moonbox looks challenging because it is. I think even Amazon operate on a wafer thin margin. So can we scale up? Because now we might be doing around 100 crore gross merchant value for the year. So I don't think if we don't scale up at least by 10 times, we will get to the reasonable profitability on this business. Is that correct?
No, it's a different business, Rajesh. I don't think I will like to compare or compete with Amazon or somebody like that. We meet a different need. We bring finance and products together. Amazon doesn't provide finance that way at a doorstep. So we work with microfinance companies and other relevant ecosystem players to provide the finance and products to their customers. So the finance is being provided by the microfinance player or a bank directly to a microfinance customer, and this is how we are facilitating their buying of the products which we take to them. So Amazon is in a different space. We are in a different space. Yes, as far as turnover is concerned, we need to grow, but we should be profitable on a month-on-month basis. I think during the last few months they have been profitable, and I expect them to continue that journey during the current fiscal as well.
Okay, that's good to know. The next question is from the MSME segment. The NPA of this segment still continue to be high. So can we expect it to get normalized in the coming quarters?
Yeah, absolutely. They are doing fantastic as far as collections are concerned, and pretty much their book post-pandemic phase 1, first phase of the pandemic when first time it hit us, of course it was a huge surprise for the whole world, including all of us. But whatever portfolio they have created post-pandemic, the NPA levels is less than 1% there. So it is commendable, I would say.
Okay.
Whatever little problem, which is why you see a NPA of slightly elevated levels, not compared to industry, not compared to others, but at our mind it's slightly higher because of pre-pandemic portfolio where we had to do a bit of a restructuring. That's where the challenges remain. Post-pandemic, it has been fantastic.
Okay. And in the last quarter, there was talk of starting this collateral-based lending. So in the MSME segment, I think property loans or something. So we had any progress on that?
Yes, we are expected to start sometime later the current quarter or maybe the next quarter, which is end of Q1 or beginning Q2. We will start that. We are already tying up co-lending limits with relevant players.
Okay. So we had a terrible experience with respect to micro lending in the past. So we are completely exiting it, or we'll start in the future with extra portion or something like that?
We have. See, I would say a couple of things. One, yes, we had a bad experience, predominantly on the back of the fact that the regulations were a bit fluid. And we understand the central bank is working on a new set of regulation. Some draft has come. Let the new regulations come, and I think I mentioned earlier, only when the new regulations come, we'll examine it and decide whether we want to be there in that segment or not. As far as our exit is concerned, we are pretty much exited. You saw our book is 1.63 and there is absolutely no delay or default anything in the portfolio. Whatever problem, we have written off every single thing there. This small portfolio continues to remain because we continue to experiment with our system, software, everything, so that assuming the policies and the regulations which come are appropriate and we like it, we may enter it. But at this stage, we are away from that segment.
Okay. My last question is regarding the stock valuation. I go to, like, normally the most stock screener.in, in fact, you might be aware, the most followed stock valuation and the balance sheet study for the companies in India. And as per that site, Inditrade intrinsic value is 104 rupees as on today. And the stock is trading at 70% discount. So why not consider a buyback, at least to enhance the shareholder value? Because I don't see any red flag with this company that this company should trade at such a big discount. At least to the point that promoter shareholding goes to 75%.
So I don't want to comment on the market and market prices in this call. You are absolutely right. The intrinsic value is significantly higher compared to where it is being traded at.
Yes.
Promoter holding is already at 73% plus.
Yes.
Increasing the holding by 1%, 1.5%, I don't think will move the needle. Unnecessarily, it will reduce the liquidity further. So yes, what you say is a matter of concern for the shareholders, including the promoters. And we will hope the market to do better justice to this script in the near future.
Okay, sir. Let's hope for the best and good luck for the future. Thanks.
Thank you.
Thank you. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to Mr. Sudeep Bandyopadhyay for closing comments.
Okay. Thank you very much. Thank you everybody for joining this call. If there are no questions, then we will conclude and wish you all the very best. Hoping to see you again next quarter. Thank you.
Thank you. On behalf of Inditrade Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.